Idrisu Mahama on the line, who's the Executive Director at EDC Stockbrokers. Idrisu, thank you so much for joining us. I just want to get straight into it. We have had analysts saying that, we could see a fall in the cedi, even because of the election petition declaration, but it's been quite resilient. What do you make of this?
That is the prediction people had before the verdict, just like they had some prediction on the trading on the floor. What we keep saying is that investors are looking for more other things than just the political situation in Ghana. They should remember that the cedi depreciation is dependent on the demand and the supply of the dollar. And then they could not just conclude that it's a political verdict that will allow it to depreciate further. What we are saying is that if the economy is able to meet the demand of the dollar either for export or payment for imports, it means that the cedi will stay stable, and that's what the prediction we have. Going forward, we see the cedi get stronger because we see some kind of inflows. We just finished the sovereign bond. The government hasn't finished or haven't started the use of the funds. And so we think that these are monies that are coming in to soften the demand side or the supply side of the dollar, and then it will match the demand. That will make the cedi very, very resilient.
Okay, let's chat a little bit about the Ghanaian Stock Exchange. It's been one of the best performing bourses. I mean, it was up right now about 65.83% year to date. What do you think is driving this?
The market in Ghana is being driven mostly by the financial and insurance sector. If you look at the gainers for the period to date, we have two of them that have made above 100%. We only have one loser on the banking sector. With the insurance, we don't have lucid as today. We have Enterprise Group and we have State Insurance Company. With the banking sector, one can explain that it's mostly the one driving the service sector for the economy as well. And that comes as a result of probably the growth in the economy, the demand for financial services, and the demand for credit and capital for business expansion. And they are able to meet all this demand because of the increase in capitalization that have provided more funds for banks to give more credit. They've also had a lot of expansion in terms of branch network to mobilize deposit at a cheap rate. That gives them a very good spread to be able to give loans, more credible loans, and the collection has been very, very efficient.
So we're definitely seeing the financial sector there, a big contributor there. Let's shift our focus to the fixed market of the fixed income space. The recently listed Eurobond, looking at that, it listed at a yield of about 8.1%. This with the issued coupon of 7.8. How is that faring?
What we do was to do a local listing on the market. There are a few reasons why government actually have to do that. One is to have the sovereign bond listed to probably increase the yield curve. We also think that it's supposed to encourage local multinationals or local companies to issue bonds when they are looking for capital and sort of depending on the banking sector. This will actually increase the liquidity of bonds being traded. We also saw local investors participating in the sovereign bond, and this tends to tell you that it is a way of encouraging people to invest on the sovereign bonds or foreign issued debt securities. In the long run, we probably will see government depending a lot on the local market, especially through syndication, to be able to raise this capital and not always resort to loans coming from the multinationals.
Well, Idrisu, thank you so much for that insight. Unfortunately, we have run out of time. That was Idrisu Mahama, who is the Executive Director at EDC Stockbrokers.